Facing a tax debt you can't pay? How to navigate the IRS collection process. Missing a tax deadline can trigger immediate anxiety, but tax professionals emphasize that the situation is manageable if you act proactively. The IRS is not an entity that seeks immediate seizure of assets the moment a deadline passes, but it does operate on a relentless schedule of interest and penalties. The most critical takeaway is this: the IRS prefers communication over silence. Ignoring the problem does not make it disappear. It only makes it more expensive. The immediate consequences of missing a deadline: once the payment deadline passes, a clock begins to run. While the IRS does not typically launch immediate enforcement actions, the financial cost of your debt begins to grow instantly. Accruing costs, interest and penalties start accumulating the day after the deadline. These costs never pause until the balance is settled. The penalty cap, the failure to pay penalty, can eventually reach as high as 25% of your assessed balance. The notice system: you will likely receive formal letters from the IRS demanding payment. These are not suggestions. They are official notices within the collection process that require a response. Navigating IRS relief options: if you cannot pay your full balance, the IRS offers several structured ways to resolve the debt. The goal is to find a plan that matches your actual financial capacity to avoid defaulting on an agreement you cannot afford. Short-term extensions: these are designed for taxpayers who need a brief window to settle their affairs. Typically, these extensions allow you to pay the full amount within 6 months. Long-term installment agreements for those unable to clear the debt quickly. Long-term plans spread payments out over several years. This is often the most viable path for individuals or small business owners facing significant balances. Hardship status: in specific, severe financial circumstances, taxpayers may qualify for reduced payment arrangements or other forms of hardship relief. Determining eligibility for these options requires a clear understanding of your current financial picture. The risks of inaction: what happens if you ignore the IRS? Failing to establish a formal agreement leaves you vulnerable to aggressive enforcement. Without a payment plan, the IRS has several legal mechanisms to collect what is owed. Wage garnishments: the IRS can mandate that a portion of your paycheck be automatically diverted to cover back taxes. Tax refund seizure: any future tax refunds you are owed will likely be intercepted and applied to your existing debt. Liens and levies: the government can place legal claims against your property or seize assets. Passport restrictions: for significant debts, specifically those exceeding $66,000, the IRS can trigger restrictions on your ability to travel internationally. Common pitfalls to avoid: tax experts identify several recurring mistakes that turn manageable debt into a financial crisis. The ostrich approach: ignoring notices in the hope that the problem will resolve itself. Unstrategic liquidations: withdrawing money from retirement accounts to pay taxes without a long-term strategy, which can trigger additional tax hits and penalties. Unrealistic agreements: setting up a payment plan that is too aggressive for your monthly cash flow, leading to a cycle of default. The file and forget cycle: particularly common among gig workers and small business owners. This involves filing taxes but failing to set aside funds for estimated payments, leading to recurring annual debt. When to seek professional help: while simple tax debts can often be managed directly through the IRS website, more complex scenarios warrant professional intervention. You should consider hiring a tax professional if the total balance is substantial. The debt spans multiple tax years. The IRS has already initiated enforcement actions, levies, or liens. You are unsure of your legal rights or the IRS's specific authority in your case. The bottom line: the more control you take over the situation early on, the more leverage you have. Dealing with the IRS immediately is the best way to prevent a manageable debt from becoming a permanent financial burden.